Welcome to the Deep Dive. We're here to really break down the source material and give you, our listener, a genuine competitive edge. And today we're tackling something pretty fundamental on Wall Street. It kind of boils down to this, well, this almost unbelievable price difference. Okay, get this. The Bloomberg Terminal. You know, the absolute symbol of serious institutional financial power.
Mm-hmm. The gold standard for decades.
That costs, wait for it, $31,980 a year. For one user, that's the 2025 price.
Yeah, it instantly prices out, what, 99% of people?
Exactly. But now there's this specialized AI tool, Perplexity Finance Pro, and it costs just $20 a month.
$20. It's quite the contract.
Right, like 1,600 times cheaper for access to similar kinds of data. It's kind of staggering. So that huge difference, that chasm, that's our focus today. Our mission is to unpack how AI isn't just changing how trading happens, but, you know, who gets to play the game with sophisticated financial analysis. Let's break down the difference between this old symbol of, well, entrenched power and this new tool that's emerging.
Okay, yeah. And to really grasp this shift, you have to start with the original giant, right? The Bloomberg Terminal. When Michael Bloomberg launched it way back in 1981, he solved a massive problem. Bond traders, they were basically flying blind. They didn't have real-time consolidated prices.
It was all fragmented.
Totally. The terminal fixed that. And pretty quickly, it became the essential command center for any serious financial firm. But that $32,000 a year, it's not just for data points. It's really justified by four let's call them mission-critical offerings that made it indispensable, historically speaking.
Okay, what are those?
First, speed. Unmatched speed. We're talking sub-second detection of real-time data. A price moves, you see it instantly. Second, the news. Instant news delivery. They have a dedicated global team of, get this, 2,700 journalists.
Wow, 2,700. That's a news organization in itself.
Exactly. It means Bloomberg often caches critical financial news like an M&A deal or a big policy change before anyone else, before Reuters, before CNBC.
Okay, speed, news. What else?
Third, direct trading tools. Right there in the terminal. You can execute massive trades, millions of dollars, instantly. And fourth, this is maybe the biggest one, the exclusive network, the Bloomberg Chat. It connects you directly to 350,000 other finance pros worldwide.
Yeah, the chat. That's where the real deals happen sometimes, right?
Yeah.
Outside the public eye.
Precisely. Huge, private, over-the-counter deals are often arranged there. It's this walled garden, this exclusive club.
So that network, the chat function, that really sounds like the true competitive moat. I mean, if Perplexity can get the data maybe 99% right, but can't replicate that direct connection, is the $32,000 justified just by that, the social aspect?
You've hit on a crucial point. For the top-tier professional, the value proposition is shifting. It's becoming less about just the raw data, which is, let's face it, getting commoditized,
right,
and more about that network effect, the instant communication, and actually a fifth point we shouldn't forget, regulatory acceptance.
Oh, interesting. What do you mean?
Well, in court cases, or for compliance checks, if you pull a data point from Bloomberg, it's considered like the ultimate proof. Rock solid. It has decades of verified trust baked in. It's an institutional utility, not just a data feed.
That makes a lot of sense. So if you're managing, say, $1 billion portfolio, and using Bloomberg gives you even a tiny edge, like 0.1%.
Yeah, just 0.1%.
That's $1 million right there. Suddenly, $32,000 looks like a bargain. A necessary cost of doing business at that scale.
Exactly. It's an excellent investment in that context.
And that's why they could push through that, 6.5% price hike year after year.
Yeah.
People grumble, but they're kind of stuck. It was the only game in town.
Pretty much, yeah.
But that cornered market, that very institutional setup, the high cost, the famously difficult interface.
Oh, yeah, notoriously complex.
That created the perfect opening for disruption, for this digital uprising, as you called it.
That's the transition right there. Building something like Bloomberg used to take immense resources, time, infrastructure. But today, with large language models, with modern ways of gathering data, the game's changed.
Which brings us to Perplexity AI, and specifically, their focused version, Perplexity Finance. This thing pulls data in real time or near real time from hundreds of sources. And reliable ones too, like Bloomberg itself, Morningstar, Yahoo Finance, even the SEC filings.
It aggregates across the board.
So the core idea here, the sort of emotional promise for you, the listener, especially if you're newer to investing, it's that you can now access the same kind of detailed foundational data that used to be locked away behind that huge paywall. You don't have to feel like the market is this impossibly big exclusive club anymore.
Let's actually compare them head-to-head on a few key features, starting with speed. Yes, Bloomberg is sub-second, absolutely critical if you're a high-frequency trader, making millions of trades in milliseconds.
Right, the HFT firms.
But Perplexity, by pulling from all those sources, is maybe a few minutes slower.
Okay, a few minutes.
And here's the crucial part. For, let's say, 95% of retail investors out there, people focused on long-term trends, on fundamental value, on holding positions.
You mean like, is this company actually solid? What's its debt look like? Stuff like that?
Exactly that. Looking at the underlying health, cash flow, debt, real growth potential, not just the stock ticker's blip yesterday. That's fundamental valuation.
Okay.
For that kind of investing, a 3-minute delay, it's completely irrelevant. Perplexity isn't really competing for the HFT market's milliseconds. It's aiming at the research and analysis part of the equation. That's a key difference.
That makes sense. And that difference leads us to usability, right? How easy is it to actually get the data? Because I've seen those old Bloomberg screens that look like, I don't know, something from an 80s movie. All text, weird code.
Oh, yeah. The UI UX, the user interface and experience, is notoriously difficult. You needed to know specific command codes just to pull up basic stuff like a PE ratio, price to earnings, or ROE, return on equity, key metrics.
Metrics everyone needs.
Right. And that difficulty, that complexity, is actually Perplexity's biggest advantage in this whole democratization idea. Bloomberg relies on its massive research team, that institutional trust. Perplexity's edge is transparency. Every single answer it gives you comes with citation links.
Ah, so you can check its work.
Instantly. If it gives you a valuation number, you click the link and boom, you see the original source. You become the validator.
Okay, that's powerful. And this brings us to what you called its secret weapon, the deep research feature.
Yes, this is where the AI really starts to pull away, not just on cost, but pure efficiency.
So on the terminal, if I wanted, say, a big report on the semiconductor industry, comparing players, looking at risks.
You'd be there for hours, seriously, hunting through different screens, pulling data points, maybe exporting to Excel, trying to format it all. For a pro analyst, that's easily an 8-hour job to build a comprehensive report from scratch.
8 hours.
With Perplexity, you don't navigate menus. You just ask it, like you're talking to an assistant. Generate a 15-page report on the semiconductor industry. Include market share for the top players and potential future regulatory risks. And it scans maybe 50-plus sources and generates that report for you in about 2 to 4 minutes.
2 to 4 minutes. From 8 hours.
Yeah. Now, look, there's a critical caveat here. It's an incredibly powerful first draft. It gets you maybe 80% of the way there, instantly structured, information gathered.
But you still need to check it. The human element.
Absolutely. You still need that human oversight, that critical review and verification. But it just vaporized 8 hours of tedious grunt work. That speed, combined with the simple conversational way you ask for it, that's transformative for anyone doing analysis.
That time saving is huge. Especially, I imagine, when you deal with those really dense financial documents, SEC filings.
Oh, absolutely. For anyone listening who isn't familiar, SEC filings like the 10K, the big annual report, or the 10Q quarterly updates, these are legally mandated documents where companies lay out their financials, risks, management's view, everything.
And they are long and dense.
Extremely. Finding specific information in them using traditional tools, even Bloomberg, requires knowing those arcane codes and navigation paths. Perplexity. You can literally upload the PDF or paste a link and just ask it questions in plain English. Here's the latest 10K. What are the top 3 litigation risks mentioned?
And it tells you.
Instantly. It reads, digests, and synthesizes the key risks that might have taken you hours of careful reading to find and understand. That right there is accessibility in action.
Okay, let's make this concrete. Walk us through a real-world example, that aha moment. Let's say someone wants to analyze Apple stock, AAPL, using the old Bloomberg way. What does that look like?
Right. So you go to the dedicated Bloomberg machine, you log in. You type AAPL equity HP. That's just the start. Then you navigate through maybe 3 different complex menus to find the basic PE and ROE ratios.
Just for those 2 numbers?
Yep. Then you probably have to back out, go to a different screen or function code to look up earnings history, maybe another for analyst ratings. You're jumping around, manually piecing it together.
How long does that take?
For someone who really knows their way around the terminal, maybe 20 to 30 minutes to gather the core data points for a basic analysis. For a beginner, honestly, it could be 2 hours of sheer frustration just learning the navigation.
Okay, 2 hours of frustration versus The Perplexity method.
Totally different experience. It focuses on the outcome you want, not the process of finding data. You just type a natural language question, something like, should I buy Apple stock right now at $180? Analyze its valuation, competitive standing, and main growth drivers.
One sentence.
One sentence. And in about 30 seconds, maybe a minute tops, you get a structured, easy-to-understand response. It'll pull out the key data points you asked for, PE, ROE, maybe recent growth, key GR, but it also synthesizes it. It might offer a summary based on the data it found, like, based on current estimates, analysts suggest it's a BUI, but perhaps wait for a 10% price dip.
So 30 seconds versus 20, 30 minutes for an expert or hours for a beginner. That's, what, 40 times faster, roughly?
At least. For delivering that initial structured analysis, it's incredibly fast.
That speed is amazing. All right, let's hit the pause button here because this is crucial. We need the hard truth. Perplexity is not a Bloomberg Terminal killer. Not yet, anyway. And we have to talk accuracy.
Absolutely essential point.
Because if a tool is 40 times faster, but gives you the wrong numbers, it's worse than useless. It's dangerous.
That is the single biggest challenge, and we have to be upfront about it. There was a test run by a group called Compounding AI, and they found Perplexity could be wrong on specific granular financial data points about 15 to 20% of the time.
Whoa, wait, 15 to 20%? That sounds really high. Like if it says the PE ratio is 25, but it's actually 30, that's a big difference if you're making investment decisions.
It is a significant error rate for precise figures. And yes, that's the kind of error they found. Maybe a slightly outdated figure pulled from one source, or a calculation based on slightly different time frames aggregated together.
So does that make it just an educational toy then? Or is there a way to use it safely if that error rate is floating around?
It means we have to be smart about how we use it. It is a phenomenal research and idea generation tool, but it is absolutely not the final verification step, especially for critical numbers. Bloomberg, with its decades of human verification and institutional processes, has an error rate closer to like 0.1%. That difference comes down to the rigorous, often manual checking. The AI is brilliant at synthesizing, but it can sometimes grab slightly off data from its vast pool of sources.
Okay, so verification is key.
It's non-negotiable. Which leads to some golden rules for anyone listening who wants to use these AI tools for investing. Rule number 1, use Perplexity mainly for that initial deep dive, for generating ideas, understanding industries, getting the big picture. It's incredible for that starting phase.
Okay, rule 2.
Rule number 2, always validate the critical data points, especially numbers like PE ratios, debt levels, revenue growth figures. Click those citation links Perplexity provides. Check the original source. You have to be the final check on the numbers.
Makes sense. Don't blindly trust the AI's number.
Never blindly trust. And rule number 3, if you're planning to invest a significant amount of your money based on this research, cross-check that crucial data with at least 3 other reliable sources. Your broker's platform, Yahoo Finance, official company reports, whatever you trust. Triple check before you hit buy.
Use the AI for speed and breadth, but use human checks for critical accuracy.
That's the safe and smart way to leverage it right now.
Okay, so thinking bigger picture now. This shift feels like more than just technology, it feels like. Well, the democratization of financial knowledge. For what, 40 years? Only the people or institutions who could shell out $32,000 a year had this unfair competitive advantage, right? They got the news first, had the best analysis tools, had that private network.
It was a significant information asymmetry.
And Perplexity Finance, even with its caveats, it sort of kills the core idea that only the super rich get access to good financial data and analysis tools. Those gatekeepers who controlled complex reports and instant summaries, their grip is loosening. You, the listener, now have the power to do deep analysis, to digest those massive SEC filings, to get structured summaries, all for the price of like 2 cups of coffee a month.
And maybe the most profound impact is how it compresses the learning curve. Think about it. Historically, becoming a really competent financial analyst, someone who could comfortably use a Bloomberg terminal and understand all that data, and that took years, maybe 5 to 10 years of hard graft, study, painful mistakes.
Yeah, just learning the tools was a barrier.
Exactly. The complexity of the tools was a huge barrier. Now, with a tool like Perplexity, you can potentially shrink that learning process dramatically, maybe down to 3 to 6 months for someone dedicated. Because you can instantly ask it to explain complex ratios. You can compare 50 companies on key metrics in minutes. You can analyze industry risks almost on demand. The barrier isn't so much the cost or the expertise anymore.
It's more about curiosity and discipline.
Curiosity to ask the right questions, and the discipline to follow those golden rules. Verify, verify, verify.
So maybe the final thought for you, the listener, to take away is this. Perplexity Finance isn't just changing how you might invest. It's fundamentally changing who gets access to the kind of knowledge that used to be exclusive. It's leveling the playing field in a way that just wasn't possible even a few years ago, offering speed and accessibility that's kind of unprecedented. The challenge and the opportunity for you is to harness that power, wisely blend that AI speed with your own crucial human judgment and validation.